22, and today I wish to analyze the Bitcoin weekly chart. We can see there's a big swing up from 2020 September all the way here from below 10,000 up to 67,000. So the big swing up and then all the way down. So it's hard to predict, of course, but it can be explained. And the theory that I'm using to explain called a median line trading principle. The first principle that when a median line is drawn, there's 80% of the time to return to the median line. How it can draw the median line and can sorry, not this one. The Andrew pitchfork, then you first to decide the pivot point, and then a swing up, and then you can get a median line, okay? So you can see, according to that law, you will see have several times, you review again, you have 80% of the time to touch the median line. Okay, then you see touch here, okay, so this law fulfilled. And the second law, when the price returns the median line, they will form the next pivot point. Okay, we don't care about it because this is for the next move. Then principle 3 is when the price returns the median line, the price often will form several small swings around the median line and touch the median line more than once before moving on. This means that here you would, when it touch here, and not one time, you don't expect to touch one time and then all the way up again. You would touch it several times so that now you can either would move all the way up or touch it the third time, but you never know. But anyway, there's already met the criteria of touching median line, so possibly it would oscillate around that declining median line. There are a few examples for that. We can see that for some classic example that for the wheat future in 2002 that we see the median line it up and the price would touch median line, okay? And then that is for weekly chart for General Motors, that a median line and it touched several times. Okay, sometimes overshoot. This means that it cannot exclude the possibility that it will go down all the way here and up again. Okay. And that is copper futures 2002. The median line is touched here. Okay. And then there's not one time but several times. Okay. So it's not for short-term prediction, but anyway for the medium term or long term, that can be explained. That is say if we use Andrew pitchfork a little bit earlier, when it comes down, it confirms the price down. From here, you can short it because according to the principle, you won't go up again. Of course you can, but the probability is less. Okay, you have 80% of probability of that will going down again, touch it a second or a third time. But now it's too hard. It's hard to tell whether it's still going down. Never know. But I mean the great probability is somewhere at the region here. Okay. Now it's too late to short it. Maybe, I don't know. But anyway, that's one little tool that can be useful. Another principle of this book is that the principle 4 is that the price does not reach the median line, the price moves the opposite direction more than previous swing size. That is say if it don't touch the pivot line and all the way go up again, it can be going very high. Okay, so that means that, but it means if here it's finally up, it can be above this one, maybe. But anyway, at this stage, it's hard to predict because we already missed the best position for shorting. It should be somewhere here, not here. Okay. Okay, that no tools are perfect, and there's only one of the tools that you can consider adding to the trading arsenal. And if you're interested in this book, I will give the link of this book in my YouTube description, and that you can order that in Amazon. It Kindle available. And that book called The Best Trading Methods of Alan Andrews and 5 New Trendline Techniques. Okay, thank you for listening, and talk to you again for other technical analysis later.